The federal government has just made insurance in the individual private market much more expensive. This came in a notice, a bulletin that was issued by the U.S. Department of Health and Human Services called the Notice of Benefit and Payment Parameters for 2020. It's something that usually doesn't get a lot of media attention or a lot of hype because it's issued every year, and it starts setting the table for what's going to happen in the next open enrollment period in the individual market, in health reform's marketplace. This was issued this past April, right in the middle of April of 2019. It is a final rule that is setting ACA marketplace standards that will be effective for 2020, the next insurance year, for which people will be purchasing insurance at the end of 2019. Now, when the proposed rule was introduced, there was no support for the changes that were suggested, but the feds went ahead and made them anyway. It's not mandatory that they made these changes. It was entirely discretionary, and they were unpopular, but they did them anyway. And there are two main impacts of some of the changes. We're going to talk about the impact on tax credits in the marketplace first, and then we're going to talk about some out-of-pocket impacts that people will feel. The first thing that happened in this payment parameters notice was it changed how the applicable percentages were adjusted each year. So in essence, it's cutting the amount of the premium tax credit available to consumers in the marketplace. So what that means is individuals that have a premium when they're buying Obamacare private insurance in the individual marketplace will not get as big of a tax credit as they got last year. That means their premiums are going to go up. They're going to be responsible for more of that premium. That's going to mean 7.3 million people of the 8.9 subsidized people in the marketplace are going to see a bigger premium on their insurance bill next year. The administration, by its own estimate, expects about 70,000 people to drop out of the marketplace because of these premium increases. That's the direct impact. The indirect impact of these changes to the amount of the tax credit is hurting the marketplace risk pool. When you pull 70,000 people out of the risk pool, you're going to see enrollment decline, which means a net premium increase for all other insured. The cost is still going to be spread around and shared by everybody else. But we also said there's an impact on cost sharing. So because of this payment parameters notice, the increased limits on out-of-pocket costs, including for those with employer-sponsored insurance, will go up. So the dollar amount is estimated to be about $200 for individuals or $400 for families, which doesn't sound like a lot, but the individual out-of-pocket limit in 2020 will be $8,150. For the family, it'll be about $16,300. That's how much folks could be paying out of pocket. That was a big increase over last year. This would disproportionately impact people who have pre-existing conditions, as all political pundits and health policy experts are telling us. If you look at the people that end up using that out-of-pocket expenses because they're more frequent users of hospitals and healthcare providers, it's typically those with pre-existing conditions that do that, which means they're the ones that have to pay out-of-pocket before they hit that maximum. You can read the bulletin. It's quite extensive. And share your own thoughts of that. We link to it in the description below. But if you have questions or want to learn more, you can certainly find us at healthwatchwisconsin.org.